Hey guys, and welcome back to the ASX Investor channel, and welcome to another CEO interview. Today, we'll be discussing all things fintech. ASX CRO, we're a company really looking to play at the intersection of a range of different fascinating sectors, from payments to software, as well as lending. They're developing out a comprehensive solution to really help businesses get paid on time and paid better around the nation and eventually around the globe. It's going to be a fascinating story to unpack. We're looking forward to 2022, and we're discussing it all with the CEO and Managing Director, Adrian Floate. Adrian, it's always a pleasure to have you join us on the channel, mate. Welcome back.
Mate, it is great to be here.
2021 was a transformative year, to say the least. I'd love just to have a bit of a discussion about it. How have you found the year, some of these key highlights, and how have you and the team reflected on it after everything that's gone on?
Look, I think the key thing is that we set out with a plan. And so this time last year, we knew where we wanted to be, and we've done about 99% of what we set out to do. And that's really pleasing. I think whether you measure it on revenue or you measure it on strategic positioning, or where we actually stand now in the overall landscape, it's been a pretty satisfying year. And I suppose as we go into 22, we have all the building blocks in place to really scale out now. And we're just ever so close to being the business that I've wanted us to be. And there's like a healthy urgency now just to finish that off, get over the line, and really grow.
Cirralto has a multifaceted offering, as we've discussed before. I think you've previously mentioned that you use your software as a vending machine. You're able to mix and match components and different types of offerings to customers. Can you talk about the different capabilities you've assembled now and how customers have really been taking that up with the offerings that you have provided?
Yeah, absolutely. So I suppose, look, broadly what we're doing is connecting two players together in a trading cycle. And we've spoken a lot about our strategy on acquiring nodes. And to us, what we've really done is redefine what a node is to mean, for us, a node is greater than 50 million in turnover, maybe more than 1,000 customers, paying them on a regular basis. And then against that backdrop, I suppose ultimately for us, what we're looking at is then, does that spoke or our customer's customer have a logical fit for our other software solutions? So looking at how we've been going about it, we've largely been focused on selling the Spenda AR product, where we're connecting to that node's desire to get money in, and then separately targeting marketplaces as I suppose a microcosm where we can offer pay now and pay later services. And really we've used this quarter to kind of perfect what we see as the pay now, pay later widget, which is a piece of technology you can drop into an online platform and guide the user through making a payment or paying later. And really all that stuff's kind of falling in behind our pay statement by link capabilities, which again is sort of an extension of what other players, like your PayPals and that sort of stuff have done with pay invoice on a text. But what we're doing is, kind of connecting the buyer into the seller's view of that data and allowing them to make multiple payments and split transactions over, so that they're not just getting value on a single transaction, they're getting value across integration end to end. And I suppose the first quarter for us is really, all we're really focused on is just delivering on the deals we've already got, maximizing them out. So we've announced things like, like James Tyler, we've announced things like eBev. We've recently announced the Infront transaction. We've got some great transactions, in market or in play, and those opportunities, just rolling them out scales our revenue significantly. It's probably not a surprise that we're, with those couple of announcements, we've well and truly exceeded, last year's revenue to the half, which is awesome. But again, massively underperforming on where we think we'll be this time next year. And that's probably the key thing for us. And what we're really hoping is the shareholders have been with us along the journey, buying us up at 0.5 cent and 1 cent, that they're going to really, have a fantastic 2022 and, maybe rent a yacht or 6 on the harbour or somewhere else. Maybe go to the Maldives. I don't know. If we're lucky enough that the border trajectory remains the same. So we think we're, what 21 has done is opened up the world of opportunity to us and allowed us to demonstrate to bigger global players that we mean business. We're here for the long haul, and our strategy to leverage the software as a vending machine and layer that revenue on is a very effective one.
And just building on that as well, I think people would have previously heard of it before, that every transaction has got a buyer and a seller, a buyer and a seller. Traditional financial transactions, it's often just the one transaction, you take your clip and there's that. Spenda is unique because of that. Can you just elaborate on that and really talk about why you're able to go all the way through that supply chain?
Yeah, absolutely. So look, historically speaking, that's what we've done. We've enabled businesses to exchange data point to point. And traditionally that's been in the buying cycle. So purchase orders become sales orders and sales orders become sales invoices, and then they're received by the buyer and become purchasing invoices, and then we make a payment. And so I suppose for us, we've really understood the life cycle of transactions for a very long period of time. And now what we're really about is looking at different and unique ways to monetize that. So when we look at our node strategy, that's not going to last forever, because what those nodes do is they give you a cross-section through a vertical market, and all of a sudden you've got this big engagement on the customer end base or the buyer base. And there's two pivots for us in that space, but both of them really get upgrade driven through the software itself. So the first one for us is being able to take that customer and move them into an AP platform. And really our competitive advantage is that our buy now, pay later framework is a financial framework that inside the Spenda accounts payable solution looks and feels like an overdraft. So I can make a batch payment as I would with any other batch payment cycle, but instead of it being, an email of I think I should pay these ones, and then an approval email, and then generating a batch file, and then logging into the bank and uploading the batch file, and then getting authority around that, the Spenda AP framework allows us to create the batch payment, share it with the authorizing parties, and as soon as authority is received, trigger payment. And that triggering of payment can also access the debt account. So we can split batch payments between debt and cash. So we're really focusing in on helping both buyer and seller maximize their working capital opportunity. And a lot of the software we're releasing now is squarely focused there. And I suppose for us, when we look internationally, if we look at that supply chain and that sharing of data in a circular motion, if we're dealing in invoices, the great thing for us is we can leverage our integration capability, but go outside of Australia just through sheer certification. And that effort is all about demonstrating what can you do on your home turf, and where can you transpose it. So Asia, big focus. We've now got the structure in Singapore. We've got a team now in India. That's a big focus for us. But obviously, the main event is the US and the UK and other parts of Europe. There's so much bigger markets than us, and that Spenda Pay and or the AP and AR products really migrate well overseas, and we think we can cross-pollinate our systems integrator relationships that we're building domestically into other markets.
Truly is fascinating. There's plenty to watch in terms of the international and global story. I'd like to ask you as well, you spoke about the opportunity for Spenda to be creative and to think about some different types of mechanics. We've recently had the news surrounding Australian Agri finance. Looks like a big deal, a big opportunity. It's a few different mechanics as well that we haven't seen previously. Can you talk about who AAF is and really why you're so excited about it?
Yeah, look, I mean, we've that relationship sort of came with the Envigo acquisition, and we certainly did some strategic funding pre-acquisition, which we announced back in, I think it was April time. And I suppose when you look at that business, we're so aligned in vision about helping farmers to access capital, and most importantly, access capital which allows them to grow. So we're not looking at traditional lending products like a bank where you're locking in, property assets, and the maximum amount you can borrow is essentially linked to a loan to value ratio in the physical land. We're focused on how can we lend you money that helps you add, for argument's sake, beasts to your herd or sheep to your flock, so that any money we're lending to you is actually adding profit to the bottom line. And then we look like the strategic lender as opposed to a lender of last resort, and that alignment is where we can work really nicely with Australian Agri Finance to grow opportunities. We've already been successful in winning the first few deals, which is great in an early relationship, and that's already transpired to revenue on the bottom line, which we'll see in our cash receipts when we announce our quarterly in due course.
And you touched on it there, that flowed through the Invigo acquisition. There was a couple of acquisitions over the past 12 months and a couple of supply agreements as well. Of course, the investors are waiting to see those flow through. What can you say about how those are developing and the types of deals or opportunities that they may be providing to you moving forward?
Yeah, look, I think the interesting thing is that it's really hard to go and compete in a very competitive landscape when you do the same thing as somebody else. And asking someone to move to you if you do the same thing as somebody else really is just a function of price. So our breadth of capability as a software company, coupled with our utilization of payment services, and then adding on lending as, if you like, a subset, is allowing us to have multiple entry points into a customer and satisfy needs in a different way. So we're not the same then. They can't go to another vendor and go, oh, I'd like what Spenda's got. And I suppose perfecting that has been the highlight of 2021, and the capabilities that allows us to take into 2022, super exciting. I mean, the key thing, like if we look at payments, is if we are able to open up an account like say eBev around lending and then offer them payment, their payment flow is many times bigger than their lending flow. But the lending is what open the door. The payment is that innovation piece which allows us to really scale the account. And then when we look at that from a practical and compliance and security and legal perspective, having those dual capabilities allows us to do things like consolidate credit, risk, underwriting, really focus in on delivering single statements. So a statement for your payment services and a statement for your lending. And we're sweating the same asset because any business doing lending needs that. Any business doing payment needs that. But all of a sudden, we can do e-statements straight out of the gate. We're not like a bank generating PDFs off old pieces of paper. We've got contemporary technology serving up, digital statements. So ultimately what that means is as we move into this next phase, we really consolidate our payment services into our end user license agreement and our lending services into our end user license agreement, is we're going to be able to same day board merchants. So cut down the approval cycle and make logical assessments straight out of the gate, where if we've lent you money, well, what kind of payment service can we give you? If we're processing your payments, what kind of lending can we give you? And then use the data that's coming out of that integration and just business behavior and study it. Use AI in there to look at, well, maybe we should offer you a limit extension. And maybe you can actually apply for that in real time. So you're sitting there and you need an extra 10 grand right now. And rather than needing to go through some sort of extended loop, you can just say, hey, I'd like to extend. And if we've got enough data on you to do that, why can't the machine make the approval? Why can't we manage risk like that? Well, the answer is we can. And that's why we are where we are. And I suppose we've been really conscious of having patience.
All of that makes sense. It's really fascinating to hear that. How do you go about evaluating clients and really looking at those opportunities to continue to scale and focus on those longer term growth objectives?
So it was a few months ago, our advisors in New Capital kind of made the comment that it'd be really poor choice for us to focus on short-term wins when the main event is far more sustainable. And so we've been really focused on evaluating deals through a lens of how will this take us through 22. How does this take us into 2023? And the big thing there is kind of lining up the whole team around, well, we want to do this revenue objective in Q1. This is the software we're going to sell. These are the customers we're going to go after. And then this is the software we're going to build for next quarter and the quarter after. So we've kind of built what I'd call a rolling quarterly plan to keep growing the business in a meaningful direction. And that sometimes the impact of third-party advisors who are able to even fly higher up in the helicopter than I often do is so useful in the way in which both the board, the executive, and our management team is planning our future. So yeah, we're positioned to keep on delivering in 22.
So in terms of recent developments, we know that there's been a range of different nodes that have been brought online, a range of different customer developments as well. Can you provide some updates into how they've been going and how the customer uptake has been as well?
Yeah, look, we're super excited with the nodes we've brought on. So as I say, eBag's now gone commercial, so it's not just an agreement anymore. We're actually generating revenue. The take-up's been great. We're really happy with how that's been going. The same thing for Hola, which seems like 100 years ago now to me. As well as the JT's transaction, which we've recently funded with a couple of their massive customers, and I think we might do some more PR and whatnot around that in the new year. But that's super exciting, and we would expect as Chinese New Year rolls around that other hurdles in that agreement will actually get met, and it'll become a significantly material agreement to us, but maybe in the scheme of life, it was a stepping stone to the next deal.
And it seems like there's evidently demand that continues to pick up pace, and all of that's culminating towards a debt warehouse. We know that Cirralto's been previously utilizing your own balance sheet to really be able to provide that deal flow, build out the systems. How's the debt warehouse development going, and what will that open up once it does eventually come online?
Absolutely. So debt warehouse has obviously been a major initiative for us, and we've certainly talked about that for some period of time now. I think the key thing to understand with the debt warehouse is we've engaged Norton & Rose as our legal counsel to put together all the compliance and regulatory work for the debt warehouse. There's maybe 3 odd weeks of work remaining to complete that task. New capital have been engaged to raise the debt for the fund and have already gone out to a couple of different banks and credit funds. The intent is for us to create 2 special purpose vehicles in the warehouse. The first one for general business finance, which will house buy now, pay later, debtor finance, and early settlement discount. And then a secondary special purpose vehicle just for Agri. And the company will move to leverage its existing loan book of current customers, as well as signed term sheets and letters of intent to maximize utilization of this initial fund really quickly. So we're weeks away from completing those compliance steps. We think that the fund will be online in Q1, and we don't think we need to raise any more money to establish the fund. So yeah, we're right on the cusp. And the key thing for us is, that super efficient administration of the lending facility, and then blending that in with our payment capability. I suppose the thing that we really want the market to understand is lending is a subset of payment. So, if you use a simple premise of 100 million in payment flow, and 50% of that takes debt, essentially we're double dipping the chip. So in the first month when you start, you're picking up 50 mil in payment processing fees, and then another 50 mil in lending. And then in the second month, you're picking up 100% of the payment, so the whole 100 mil for payment plus another 50% in lending. And so that rolls on. And so for us, really, we just differentiate ourselves beyond what anyone else is doing in market. And when we throw in SaaS on top, so where we get that really nice, weaponization of the software, where we can upgrade the buyer and get them processing payments using e-commerce, using POS, using service, all those kinds of things just build incremental revenue. So, the key for us really is to utilize 2022 to, cut through the cash burn and start to accumulate balance sheet. And, we're talking about policies at the moment on how do we reinvest balance sheet? How do we continue to grow the fund? How do we expand payment services? We're starting work very actively to get ourselves processing in other markets. And obviously Asia is the first cab off the rank. We've got a strategic goal to establish a hub in Singapore and leverage both the Indian team as well as Singapore as an access to that Asian market. So look, it's a cracking time for the business. It's pretty satisfying to be here.
Since we started having our discussions, we've been talking about the crawl, then the walk. But is it fair to say that it seems like Cirralto is now just about ready to start striding out and going on this run? Is that where you'd place the business at the moment? And is the handbrake, in essence, just starting to come off?
Yeah, I think so. I mean, one of the things we've announced internally is a restructure in our teams. So very much more of a project management focus on the way we deliver. So we've got some new roles in customer project management where we're delivering nodes at a scale. We've moved some integration resources into those project teams so we can build large ERP integrations much more quickly. We've restructured our sales team to really focus on leveraging the systems integration partnerships that we've been developing. So we think we'll do a lot more of those. I doubt we'll be allowed to announce them, but it'll become obvious in due course that positioning ourselves with the systems integrator partnerships, with your JD Edwards or your Microsoft Business Solutions, NetSuite, all those kinds of products are vendors we want to work with, and we know we've got a compelling offer for their customers that combines debt, payment, and other capabilities that those products just don't extend out to the customer's customer. So yeah, we're looking forward to a rest. I can guarantee you will be much time spent down the beach, and then really coming back hard as we start this next chapter.
A well-deserved rest period after a busy year. Obviously, company progression keeps moving in the right direction. I did want to ask you as well, we know that many of the technology names across the ASX have had a bit of a softening in terms of share price over this past period. Cirralto hasn't been immune to that. Have you paid any reflection to the share price and any thoughts that you had about the trajectory and what investors should be looking out for?
Yeah, look, I think there's probably been a little bit too much buy now, pay later identification or alignment with us. I think we've probably swum above the pack in terms of how other parts of the market have been dragged down. And I understand the regulatory concerns that have come out of the US and then flowed onto Afterpay and then flowed onto the rest of the market, Zip and whatnot. We're already focused. Regulation is not an issue for us. We're lending to businesses. We're already registered with AUSTRAC. We're focused on different kinds of compliance. So there's not really a lot of new legislation that's likely to adversely affect the business. And consumer for us is really just a payments play. We're not trying to lend money into consumers at this stage, but payment for us is a great opportunity, and we're already obviously processing business to consumer payments via our POS, via terminals, via virtual terminals, via our pay invoice by link. Some of that hardening up of quote to pay in the consumer layer is very real, and there's great opportunities there. Installment payments, that kind of stuff. We've got really good capability in that space now, and that transcends B2B and B2C.
It's been a fascinating past period for Cirralto and Spenda. We know that obviously over this past period, the December quarter has been one that investors have had circled on the calendar. Did you have any reflections about the revenue trajectory that they could expect and some of those key growth drivers to really look out for in the numbers?
Well, look, I think the revenue trajectory certainly on track with where we wanted to be. As I said, we've done all the things that we thought we needed to do that are aligned to our internal KPIs. I don't think that anyone in the organisation is displeased with where we've ended up or where we think we'll end up, because there's still a few days left. No doubt there'll be customers paying us next Friday, and we'll be going to get that cash. So yeah, I mean, we know the market cares about our cash receipts. We know that for us to really institutionalise the register, we just got to keep going and doing what we're doing. And I think the reality of it is there's a significant weight of expectation sitting behind us. And, that weight of expectation we're delivering into, and I suppose we're really trying to play our own game. I think last quarter there were people thinking we'd, do $5 million in revenue. I think the quarter in which we do that isn't that far down the road, but I don't think those expectations were realistic. And if they were, I suspect our valuation would be substantially different, and we'd also be making a profit. There's no secret on what our burn looks like. So at $5 million a quarter, we're making good dollars, and we'd be the only player, I think, in the space that is making money. So, that's where our focus is profitability, real sustainable business.
It's been transformative 2021. In 12 months' time, if we're looking back, what are we going to be reflecting on? And that's this period. And any final reflections that you had for those shareholders who've been following the ASX CRO journey?
My expectation would be we're going to be a business now that's got a significant balance sheet. We've got a good quality loan book out there. We've realised our payment ambitions, and I would hope that we would have Spenda Pay or the Spenda AP and the Spenda AR products operating outside of Australia, and quite effectively, I feel. So weaponising the software, big focus for Q1, really, lining up that boarding experience and then boarding the customer and then, re-engaging them to sell more and bundle services together. So it's really hard for someone to price match with us, because we can shave a bit off your payments margin if you're taking lending or vice versa. And that's how we bundle that stuff up. We think we'll be perfecting that in the very near term. But it's always the sort of thing that will change over time. Market forces will dictate, how we play the game. So yeah, it's exciting times.
That's the Cirralto story. It's ASX CRO. If you did enjoy this video, don't forget to hit the like button. Feel free to share it out. We make daily videos each and every day, so make sure you've subscribed and turn your bell notifications on. Adrian Floate, it's always a pleasure, mate. Love catching up. Looking forward to seeing where Cirralto heads moving forward.
Thanks, mate. It was great to chat, and have a very safe new year.